Well, g'day there, everybody. Thanks a lot for joining me as at this Tuesday afternoon market recap. There is about 15 minutes left in today's session. However, I think the candlestick is rather clear and also the sentiment behind it. What I'm going to do is talk about, I guess, the psychology of what's going on at the moment and what to look for moving forward. This is going to be that of a flashback essentially to the video that I recorded as at the close on Tuesday last week as we entered into Wednesday's session, because I do believe it is very applicable and relevant, I should say pertinent to what's going on at the moment. So obviously today there has been a little bit of fireworks in the US financial markets, really the global markets as well. We are still seeing a lot of chaos, so to speak, in the emerging markets. Also, we are seeing a bit of chaos over in Europe to do with Italy as well, and a lot of the bonds at the moment are really crashing and the yields are certainly spiking. However, the structure of the US market is still looking favorable, and I'm going to show you, or at least talk you through as to why that is, and again, what to look for moving forward, especially as we transition into Wednesday and really close out this abbreviated week's worth of trade. So this is the chart of the Dow Jones Industrial Average. As you can see on my screen at the moment, we are down 414 points. I think that equates to roughly 1.5%. As at this recording. But what's most important to note is that really since we've based in the month of March and also April, we are starting to price in a series of, albeit very slight, higher lows. And this is very important. We've spoken about, of course, the very real possibility and chance that we are in some form of a bullish channel, something like this. But what you should be paying attention to is certainly this blue line on my chart. We spoke about also that if we crack this support area, we could see a very sudden sort of sell-off, and that's exactly what we saw today. But you should be focusing on this rough area because we may see a very quick buying spree off from this support area. And as you can see on my chart, this is a green rectangular box that I think I drew over the weekend, but you can see for yourself that even on today's candlestick, being that on Tuesday, we are starting to develop that of a lower wick. And really what I guess our thesis is moving forward is that yes, short term, we might see a little bit of selling pressure, i.e. what we saw today. But over the coming 1 or 2 weeks, we should see these markets stabilize around this handle just above 24,200 and ultimately come on back up and overshoot these two resistance points or short-term temporary resistance points that we've priced in towards the midpoint of May 2018. So I'm still liking this setup. Obviously, you can go through and you can say, for instance, bring up the oscillators. You might come to the conclusion that, look, the markets are registering sell signals. Yes, that is somewhat true. However, what's more important is the fact that if you go back to February, we are still basing at this support handle at 23,750, and we are most recently again pricing in a series of higher lows, which is very important. Now also, if you take into consideration what's going on in our top 12 individual trade list on the left hand side of my screen, most of these stocks have held up relatively well, considering of course the sell-off that's taken place in the Dow, the S&P and the Nasdaq. A lot of these stocks are relatively unchanged, so to speak, and that's a really good signal of strength moving forward as well. But before we get there, let me bring up the S&P 500 as well, because you can really see, of course, these lower wicks beginning to develop. And this is essentially the first sell-off that we've seen that's ultimately cracked below this temporary support area at 2,700 on the S&P 500. We've recognized that this has been an old resistance area and it should act as new support in the future, i.e. today. Now, again, if you start connecting the lows since the low point in March, early April, and then you connect those, that next series of high lows, in April and May, and then simply just project it out, you can see that we're very close to roughly this 2,675 area. Again, this is the bullish trend line of potentially that bullish sort of channel that is under construction, mixed with this horizontal, more traditional form of support as well. And again, you get X marks the spot. So considering the sell-off that has been largely expected, and we spoke about it openly again last week, I think the markets are holding up relatively well. You can see the long lower wick here. Again, buyers are showing up roughly in the vicinity of this green rectangular box. Now, it doesn't mean that on Wednesday we have to simply just reverse and say, for instance, negate or at least make back all of the losses that we've established during today's session on Tuesday, but at least it sets the tone for a pretty decent area to pay attention to and potentially begin nibbling on SPY positions, diamonds, or even Q positions if you choose to do so. I still think that these markets are going to stabilize more or less just at these sort of intra-session lows that we've priced in today on Tuesday. We may overshoot it, but at the same time, it's probably going to set up with a hammer type of candlestick at this support pivot, again, coming in at around 2,675 on the S&P 500. So I wanted to bring this to your attention. A lot of people, I've seen a lot of emails coming in saying, hey, what's going on? The market's pulling back. Is this routine? Is this expected? And yes, it is. I encourage you to go back again to Tuesday's video last week, because this is one of the scenarios that we spoke about when we started to see some of the candlesticks developing at the early point of the week last week, after that gap up, and then of course the closure of that gap as well. Now what I'll do for you also is just bring up the chart of GLD. This is quite important as well. Gold is something that I'm pretty excited about moving forward, and it is holding up relatively well. Actually, I haven't actually reset. Let me just bring up the GLD ticker symbol on my screen right here. You can see for yourself right here that this is today's candlestick, a very nice candlestick. What we've done, okay, is we've closed this open window that's set up after Monday. So we had this little bearish candlestick on Friday. I spoke about this, and again, we were thinking that, look, gold might actually come on back down, close the gap, and then rally, and that's exactly what it's done. It's only up 18 cents on the ETF, but this is a very strong bullish continuation pattern, and it's giving us a lot of confidence with this trade moving forward. So I'm really liking what we're seeing on GLD. This is not the end of print volume sort of spike on the histogram here, but this is certainly elevated, and this isn't even the final closing print for the session for GLD as well. So pay attention to this. I think this is really brewing, and I think it sets, or at least it fits in with the climate, sort of the macro climate as to what's going on around the world as well, and why we are seeing again a little bit of selling pressure flow into the US markets to begin this abbreviated week's worth of trade. Now very quickly also, if I just oscillate through our top 12 individual trade list, just think about what I spoke about when we referenced the industrial average, which is pulling back to its support into a very logical area where it may be that next higher low. Think about the same discussion that we've had on the S&P 500 as well, coming back in to potentially set up that next higher low. And then look at our top 12 individual trade list. We've got Apple, and think about this to yourself. I mean, has Apple really sold off? And the answer to that question is no, it hasn't. It's still holding up above its exponential moving averages. So again, it really hasn't done all that much in the face of a rather sort of dramatic sell-off that we haven't seen in quite some time. Think about it again in terms of Amazon. Is Amazon selling off as well? No, that's two white candlesticks. All right. I mean, it's negligible, but at the same time, it's certainly, we're not seeing any sort of long, dark Morobozu candlesticks develop whatsoever, and we're still holding up above those exponential moving averages. Boeing Airlines, yes, this pulled back a little bit, but again, we're still holding up at around this resistance pivot coming in at about 355, not a dramatic reversal. Baidu still holding up at this gap support. We still have a lower gap that we might come on down ultimately to retest, but all things considered, we're doing pretty well. Caterpillar, we're still not breaking below the lows, or at least this little swing low temporary support that we established at the midpoint of May. So again, holding up quite well, and this is towards the top of this very dark long day Morobozu, which was in response to earnings as well. So Caterpillar's looking quite good. COP, isn't this interesting? Back down to support, white candlestick, no follow through whatsoever after the pullback that we saw on Friday last week. CVX, doji candlestick at support, interesting, no dark candlestick there. Google holding up around 1,075. It's trading at 1,067. I'm liking this. Now, IBM, this is something that we spoke about over the weekend, and everything we said about IBM is very much applicable right now. This is essentially potentially that of a double bottom being crafted out. Yes, we saw this pulling back down from 144 down to 140, but again, you can see this long lobber wick. So as this continues to unfold, pay attention to the Bollinger Band. You can see we pierced outside of it temporarily, but we pushed back inside it. There is a very good chance that if we stabilize around here and we let these oscillators move into oversold conditions, that this might be the ultimate low before we drive all the way back up to 157. So I will speak about a trade privately in Pro when it develops, but certainly this current handle at 140 or just above 140 to 141 is certainly something to pay very close attention to. They might see, or it might be ultimately the deepest sort of low or correctional move that we're seeing when it comes to the selling on IBM. We've got Netflix, pay attention to this, down $2.36, but at the same time, I mean, it's still holding up above its exponential moving averages. So I'm really liking Netflix, given, of course, the backdrop to what's happened as at Tuesday. So you can see why when it comes to the individual stocks, and even Tesla, by the way, that is overwhelmingly bearish in the face of, again, a relatively weak market during Tuesday's session. It's actually up $4.94. So we're simply not seeing any follow through when it comes to our top 12 list. And the sell-off that's eventuated today on Tuesday, again, was something that we spoke about as at Tuesday last week. So what we need to pay attention to now, okay, just to say this one more time, is first of all, we need to see what happens at this handle of 24,250, but there's a very good chance that this is going to be the low, and that all of these concerns or apparent concerns that are happening may be resolved, and we might see the US markets reverse and continue their sort of grind back up to close these gaps up here. That's what we're focusing on as a legitimate target, and this still holds to be true. Structurally, the market is fine, and I'll bring you, of course, some more updates as we continue into the week and throughout the week and close out this abbreviated week's worth of trade. I hope you enjoyed, of course, the longer Memorial Day holiday for my American friends. I wish you all the best. It's James signing off on behalf of Pivot Point Trading. Farewell.